Podcast Network Asia. First Metrosec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and First Metrosec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of First Metrosec. First Metrosec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host, Royce Aguilar from the Research Department at First Metro Sec.
So hello everyone, welcome to another episode of Philippine Stock Market Weekly. So let me introduce myself. I'm Royce Aguilar, Department Head of Retail Research of First Metro Securities. So let's get started. We have a special guest today, and may I correct myself, we have two guests today. So before anything else, before we introduce this special guest, let me discuss yung year-to-date market performance of the Philippines and other global markets. So taking a look at the year-to-date market performance, first, the PSCI, this is as of May 29, 2023, right? So if you take a look at the PSCI, it's down by 0.6% year-to-date. And if you take a look at other Asia Pacific, see Hang Seng is down by over 5%, Singapore down by 1.4%, Indonesia down by 2.4%, Malaysia down by 6.2%, and Thailand down by 8.3%. On the other hand, we have the likes of Japan up by nearly 20%, right? And if you take a look at the headlines, the stock market in Japan is at its highest since 1990. And not close behind, Korea up by 14.4%, China, Shanghai Comp Index up by 4%, Australia up by 1.6%. Okay, so moving on to other region, for Europe naman, si Eurostoxx 50 Index is up by 14.3%, German or HDAX Index is up by 14%, sa France naman, CAC 40 up by 3%, and then FTSE 100 from the UK up by 2.4%. Last but not least, we have the US markets. So si Nasdaq up by 21.5%, S&P 500 9.2%, and Dow Jones flat around 0.4%. And of course, we're discussing mga performance of Philippine global markets because we also have a guest here na in terms of funds. Pleased to say they have lots of funds that we will talk about later. All right. And I have a set of questions for them, and I'm happy that they accepted the invitation. So let me introduce two guests for this episode. So first, we have Mr. Miguel Lopa. So he is an accomplished finance professional with expertise in investment management and credit analysis. Currently serving as an investment specialist and assistant portfolio manager at ATRAM Trust Corp since January of 2023. So he drives AUM growth by providing investment advice and product intelligence to client channels. So as an assistant portfolio manager, Miguel also continues to play a key role in portfolio management activities, working closely with the multi-asset portfolio manager to ensure effective implementation of investment strategies and contributing to the overall success of the portfolio. So previously, as a multi-asset analyst from Feb 2022 to December 2022, he contributed to achieving investment objectives through comprehensive research and analysis on asset allocation, manager fund selection, and market risk management. So of course, during Miguel's tenure at RCBC, from July 2019 to January 2022, he excelled as a credit strategist, specializing in US and European high-grade and high-yield credit, as well as Philippine REITs. So with a meticulous approach to research and analysis, Miguel provided valuable investment recommendations that led to profitable trades and impressive returns for the bank's investment and accrual book. So that is our first guest, Mr. Miguel Lopa. So hi, Miggy, hello.
Hello, Royce. Thank you for that very kind introduction. Very happy to be here. Thank you for having us, and yeah, excited to talk about markets with you.
There we go. Thank you, Migs. We have a lot of questions for you, and we're very excited about that. We also have a second guest. So, si Ericka.
Hi, everyone.
Hi, Ericka. So, she is a business development officer of ATRAM, responsible for marketing the funds of ATRAM to wholesale partners. So, Ericka took up BS Economics at the UP Diliman. So prior to ATRAM, she was an assistant manager for BPI, where she managed all operational aspects, including distribution, customer service, administration, and sales. So si Ericka is a certified investment solicitor, a certified UITF sales personnel, and is taking up the one-year course of Trust Operations and Investment Management of the Trust Institute of the Philippines. We have here Ericka Ninon. So thank you. Again, thank you for accepting your invitation. Again, hi Ericka. Hello.
Hi, everyone. Thank you for inviting us.
Thank you very much. So guys, let's get started. And of course, given your introduction, for all those listeners and our clients, we have reputable guests for this episode. So I'm hoping yung questions namin are sufficient. So let's get started. All right. So for the first question, so we have seen signs already about that a recession may occur, may it be soft or hard landing. And CUS, in terms of indicator lang, CUS M2 money supply, most negative daw since 1933. Yung manufacturing data showing signs of contraction. Si Germany, technical recession kasi 2 straight quarters na of negative growth. Tapos si Singapore GDP naman, contracted in first quarter of 2023. Of course, we also see mga positive things yun naman. So some regions in the world are showing resilience. Like, for example, the earnings in the US, still strong. Labor market seems to be tight. So, question, what is ATRAM's general outlook ba for the global economy? So, Miggy, perhaps? Go ahead.
Yeah. No, that's a very good question. And I think the answer is very nuanced. I think you were mentioning earlier about how the markets have performed year to date. And as you've said, the US stock market has really surprised to the upside. Initially, when this year started, sentiment was extremely bearish coming off from the lows that we saw last year during October. However, we have seen some encouraging signs when it comes to economic data. First of all, you mentioned the tight labor market. US unemployment is at 3.4%. Yeah. If you look at the long-term chart of this is the lowest since, I believe, 1969. So multi-decade lows. And this is really continuing to stimulate the economy. And, it's providing the consumption necessary to sustain some semblance of decent earnings for US corporates. But we still think that there may be a significant slowdown coming. So why, I guess the question is, we've seen the Fed hike policy rates at the fastest since the inflationary periods in like the 1970s during the Volcker era. Yeah. So I guess one question is, why is the economy so strong and why is it taking so long for the effects of these hikes to be felt by the US economy? They think there are a couple of reasons for that. And one reason is that debt now, or the debt being issued now in recent years, ever since post the GFC, companies and even small businesses have continued to extend the tenor of their loans or their debt. So if you look as an example, during the COVID lows, you had all of these companies, Apple, Microsoft, companies that didn't even need money, taking advantage of interest rates and issuing 30-year bonds and extending out their maturity profile. And one of the main mechanisms for Fed hikes to cool down the economy is through higher borrowing costs, right? But since a lot of companies and individuals, even let's say if you're an individual who locked in a fixed 30-year mortgage, your loans aren't going to be repriced higher since they're fixed. So that's why we believe that it's taking some time for the effects of these Fed hikes to show up in the economy. In essence, if you look at it timing wise, maybe this could be around coming in the fourth quarter before we really see some cracks start to show.
Understood. Yeah, and for reference, actually, Miguel and Ericka, so in terms of our outlook naman, kay First Met Securities, we also see a slowdown to be felt more sa latter part of the year. So we're of the same view on that one. So given your economic outlook, what do you prefer investors should focus more now? Is it fixed income ba or equities?
Very good question. For us, at this stage, at least if you look at maybe the next 6 months to possibly the next year, on a more short-term basis, and of course, it also depends on your risk tolerance as an investor. But for us, we think the higher conviction play really is fixed income, especially higher quality fixed income such as U.S. Treasuries. And we do think Philippine fixed income will do relatively well. Also, we are after all, investment grade with a triple B credit rating by, I believe, Moody's and Fitch, and I believe we're triple B plus by S&P. So the main reason for this is that we all expect a Fed pause to come at some point. But the thing is, you might think that a Fed pause is, very positive for all risk assets and not just bonds, but even equities. But the thing is, it also depends on how the economy turns out. For example, if we look at the stagflationary periods of, let's say, the 1974 or, around the late 1960s, when the Fed actually cut, equities continued to fall. And actually, that's where majority of the declines happened during that particular macroeconomic period. And this is because of the, severity of the recession, which negatively, greatly affected the earnings of various corporates negatively. So, of course, valuations should adjust to that scenario. In that scenario, equity should really fall. However, if you look at fixed income, like the Fed doesn't even have to cut. If the Fed just pauses, you really see fixed income start to outperform. So as an example, if you look at, I believe, the last 5 hiking cycles of the Fed in 1995, 2000, 2006, and 2018. So 2 quarters post the last Fed hike, you saw the 10-year rally by around 78 basis points. And then you saw the 2-year Treasury rally by around 94 basis points. And this is just a pause. We're not even talking about a Fed cut yet. So just in terms of, the level of conviction of where you can earn money, we think that fixed income is the play. And I guess one last thing to add there, if you look at where yields are now relative to, let's say, 2019, they're at very attractive levels. I believe the 10-year GS is at 6%, formerly at 2019. I believe it's around 4.5%. US Treasuries, much more attractive also.
Understood. Thank you for that, Miguel. In connection with your answer, so regarding fixed income, which tenor or maturities do you prefer clients to invest on, or at least focus sa belly, front end, long term? Do you have any specific fixed income?
No, let's say, I guess we can talk about the Philippine fixed income first. So definitely, if you look at the curve now, it's very flat. 1-year GS is yielding, I believe, around 5.94% gross. If you look at the 10-year, 6%. So there's barely any yield pickup. The curve is actually extremely flat. So if you're looking at pure value, you just want to park your money somewhere, I believe the play really is to put your money in a money market fund. If you look at the 3-month T-bills, it's actually yielding around 6% as well. But the thing is, the case for investing in maybe the belly or the long end is that you're going to be locking these rates in. I don't know about your view on Philippine inflation, but I think consensus on our view really is, a lot of the inflation that we've been seeing has been caused by a lot of disruptions due to supply chain issues, maybe, like natural gas or oil from Russia and Ukraine, or certain lack of, supply chain management during the COVID era where, during the great lockdown, companies didn't expect the strength of demand for certain consumer goods. So if your view is that you think that inflation will normalize eventually, which is what we think, then definitely it would be quite nice to lock in, let's say, the 10-year GS yielding 6% now. And versus if you look at where it was year-end 2019, it was around 4.6%. So
Yes.
You're benefiting on higher yields, some good coupon, plus you have the potential for capital appreciation once inflation starts to trend lower and the BSP cuts.
Understood. Thank you, Miguel. And of course, for our listeners out there, we're also trying to explain or trying to promote yung fixed income investing. Because we also have in our platform through FrontSmart yung mga investing fixed income, and of course, si ATRAM also has products that cater to those. So thank you for that. But question, Miggy, kasi of course, we also have clients na prefer equities or equities lang yung focus. The question is, what's your outlook for the PSEI, or even, for example, what's your outlook on the PSEI? And then, do you have a preferred region in the global markets that, for example, they can focus?
So first, I guess, to tackle your question on the PSEI, it's very strange. We're very attractive, not just on a valuation perspective. If you look at the past, like the 10-year average, I believe the P-comp was trading at close to around 18 times forward price to earnings. And now we're trading at close to 11 times forward price to earnings. So historically, on a valuation basis, extremely attractive. And in terms of earnings growth, the view for equities team is that we expect around the full year around 17% earnings growth.
Right.
And compare that to, let's say, the US. The US is only expecting around 2% earnings growth for the full year. So around that level. So very attractive, not just on an earnings base, but also on a valuation perspective. But if you looked at how the PSC has been performing, we talked about the performance of various benchmarks in the beginning of this podcast. Man, no flows. We're still so unloved. I think we need a bit more. We need some catalyst. We need, I don't know if it's allowing short selling or some government reform to promote a bit more foreign investment and hot money flows to come in. Maybe it's because inflation, at least for the Philippines, has lagged the downtrend in inflation in our peer region. So I think it's a confluence of factors really that's making us lag relative to our peer benchmarks. But if you are a long-term investor, it's definitely not a bad time to start legging in to take advantage of the valuations that we're seeing now.
Yeah, we also agree with that, Migin, of course, no, in terms of how undervalued or unloved the PSCI is. So thank you, Miggy, for answering our questions. I think.
Oh yeah, just one last thing.
Go ahead, Miggy.
Also, you were mentioning about our fair value target for the PSE. If we just revert to the past 10-year average of around 70 to 80 times forward price to earnings, it's around 8,100. We do think there's decent upside for the PSE, although when will these catalysts materialize? That's really the question.
Correct, yeah. So for reference, we have been parang consecutive years na tayo net foreign selling, right? And year to date, we're at around 5.8 billion net foreign selling, excluding yung 20 billion ni ICT. If you include that, we're at around 25.8 billion net foreign selling year to date. So that's huge.
Yeah, exactly. So hopefully we get to see a bit more love from foreign investors and institutions. I guess just one thing to cite, I believe like UBS has, I think beginning of this year has turned overweight on the Philippines. So hopefully we get to see a bit more of it.
That's good. Yeah. Well, hopefully we can see more of that, especially parang for the past years, mostly nasa US yung focus, especially outperforming talaga. So yeah.
Definitely.
So speaking of global markets, no. So as mentioned, our company published performance of some of ATRAM's feeder funds. If you take a look at sa FundSmart. And since we were talking about global markets, I wanted to highlight lang 3 of ATRAM's feeder fund. So we have here the ATRAM Global Tech Feeder Fund, which year to date is up 17%. And then we also have ATRAM Global Healthcare Feeder Fund and ATRAM Global Multi-Asset Income Feeder Fund. I wanted to highlight these 3, mainly because I think we like to share to our listeners, to our clients, what they are all about. And yes, they are available and you can invest in these types of assets. So yeah, like I've said, I wanted to bring Eric to explain to us the nature, objective, and perhaps some top holdings under the said feeder fund. So Ericka, good afternoon and go ahead.
Yeah, good afternoon, everyone, and to the listeners of the podcast. When it comes to the different feeder funds, actually, if you find it a bit of thematic, but all of it is actually under equities, no? Global equities. So to give a bit of a background on the 3 funds that you've mentioned, the Global Technology Fund actually wants to achieve long-term capital appreciation by investing in equity securities throughout the global markets, significantly for technological advancements and improvements. It's actually a global fund that is suitable for those people who want a longer time horizon and would like capital growth in their portfolios. Currently, to give a bit of a background then on the fund, it's invested in big tech names such as Microsoft, Apple, Samsung, and Amazon, to name a few. So for the Global Healthcare Fund, like the Tech Fund, it's actually also a long-term horizon fund, and it's suitable for those who also want capital appreciation over time, with considerations naman on the healthcare sector, hence its name. So actually, the healthcare sector naman, as people would know, is considered as a defensive industry now. So the companies under this fund naman is benefiting from the growing consumer demand, regardless of the overall economy. And lastly, the Global Multi-Asset Fund, where it focuses naman on balancing risk and return and providing sustainable yield. So actually, the fund is now at 60% equities, 40% fixed income for a more balanced approach. So this one actually continues to serve as one of our core funds through these tough times. And actually, I believe it to benefit from the falling interest rates. And correct me, Miguel, if I'm wrong.
Yeah, definitely. And while, we do think that, just to add to what Eric was saying and what we discussed a bit earlier, and while we do think that, there may be a significant slowdown in the US economy in the latter half of this year to even early next year, even though we may see some pain coming out from these stocks, a lot of the funds mentioned by Eric, especially the tech fund, it's a very secular play that should really, perform, especially in the long run. So even though that, let's say, our short to, our 3 to 6 month view on, let's say, the tech sector is that it may be topping out in the short term, you still can't deny the strong fundamentals and the innovation coming out from these companies. I mean, we all saw how NVIDIA performed, right? After their earnings, I think it went up by around 26% after market. Since then, I believe it's up close to around 30% after guiding. I think the guidance was around 50% higher than market expectations. So, these developments in AI and automation, it is hard to discount not investing in certain thematic funds.
Understood. Yeah. To add to that, keep in mind, guys, NVIDIA is not, di siya basura stock, guys. It's actually a big cap yan. It's actually, I think, the sixth company right now to hit $1 trillion market cap. See that there's opportunity beyond what we provide. Kasi meron sa FundSmart na mga hindi lang local markets but global markets. And thank you, Ericka, for elaborating. And of course, Miggy, for adding to Ericka's insights. So I think the next question is actually important because, for example, si ATRAM has a lot of funds. You guys mentioned equity, bonds, and balance. So the question is how to choose the best fund ba? What ano ba yung mga factors that we should consider? Like risk appetite, age, etc. What can you pinpoint to us? So go ahead. Thank you.
Yeah, actually here at ATRAM, we do cater to different instances in the market, and we have a research team and products team to combine product development, the product that we provide to our clients. And we make decisions for our clients by understanding the needs and objectives and their suitable investment products and assessing the risks that's involved in what they're doing and providing investment strategies by communicating them effectively, just like this podcast now. And thank you very much for inviting us. And these considerations actually contribute to our decision-making process to provide those products that we've mentioned earlier. And actually, I want to point out then that even though we have a lot of fund selections, it's important for our listeners to actually assess their risk tolerance and the objectives that they have in mind and the time horizon as well, before investing in these UITF products. And consulting financial advisors such as First Metro to do thorough research to make informed decisions. I know it can be quite a lot. We have 20 plus funds that are available on First Metro, and all of those can align with their investment goals and risk appetite if they really see what are their goals and what are their objectives in terms of capital appreciation or if they want dividends. So I guess it's just really very important that they ensure that their objectives remain aligned with the changing financial circumstances that we are experiencing.
Thank you. Thank you for that, Eric. And of course, actually, we have one last question. And last June 1st, diba? So we released the UITF in our FundSmart page. So can you please explain to our listeners a bit about the benefits of having UITF in their portfolio, and please elaborate also the specific UITFs that ATRAM offers. So go ahead. Thank you.
Yeah, so I think one of the potential benefit of investing in funds, compared to traditional stocks and fixed income as it is that there's diversification already that can probably reduce your risk and protect you against inflation and increase your potential for wealth creation. These potential benefits can be associated with market potential growth, and these mitigation strategies can also help you with the market volatility and potential loss of capital due to the varying degrees of risk that traditional or like direct to stocks or fixed income assets can offer. So I think there are 5 points that I would like to highlight that can actually be beneficial for our listeners right now in terms of their investment in our UITF. So one is the accessibility. So right now, it's very easy to invest in these funds. With the Fund Smart app, it's already available on their mobile computers, their applications. So it's very accessible to invest or contribute to the following funds that we've mentioned. Aside from that, it's also professionally managed. So Migi here is part of the investments team. So they actually monitor the different investment decisions on behalf of the investors based on the market research and expertise that they have. And again, diversification, because UITF provides instant diversification by investing in a range of assets and reducing the risk by spreading their investments across different securities or asset classes, just like the multi-asset balance fund. So our global fund managers also do that. And cost effectiveness, before I think the stocks and the fixed income has high entry rate. So right now you can invest as low as 1,000 pesos for these UITF funds. So it's very cost effective for those people who want to, start investing for UITF funds. And lastly, it has ongoing monitoring from our UITF managers who continuously monitor or actively manage the fund's portfolio to align with the investment objectives of the clients, as well as the fluctuating market conditions, providing our investors with professional portfolio management. So I think overall, UITF actually offers convenience and access to professionally managed and diversified investments. It's actually attractive for, retail clients who wants to onboard or are looking for expert guidance and diversification in their portfolios. To add to it, actually here at ATRAM, as I've said kanina, there's actually over 20 funds available. And I guess that's also available in the Fund Smart app. It's both in PHP and USD currency. So you have the leeway to choose what currency you'd like to invest in. And aside from that, we also offer asset classes, bond funds and equity funds, and even various balance funds, depending on what investment strategy would our clients apply to their portfolio. And yeah, I guess that makes it a benefit to the listeners of this podcast.
Thank you very much, Ericka, for that. Of course, a lot of our listeners and clients will definitely look into investing into UITFs, of course, besides the other 20 plus funds that you have. And before we end, actually, Miggy and Ericka, do you have any last statements to our listeners or to ATRAM clients or to prospect clients? So what are your general statements to them? So I will give you the floor to share your last message. Thank you. Go ahead, guys.
I guess my message really would be, it is a very scary time. Markets have been unbelievably choppy. We've seen, quite a bit of volatility. We've seen the markets go up, down, beginning of the year up 8%. Then we saw collapses in the financial sector, at least for the US regional banks and Credit Suisse and Europe. There's so many factors and catalysts to consider, and the market narrative can change at the snap of a finger. But the thing to remember is that, as they say, over the long run, markets do go up. And if you continue to be diligent in doing dollar peso cost averaging, you continue to do that, then definitely, you can grow a nest egg and achieve your financial goals. So it's just something to consider. And it's also a reminder that if you're invested in something now and you're finding it hard to sleep at night, maybe it's time to reassess your asset allocation. Maybe you should put some of it a bit more into fixed income and reduce your equity allocation. However, if you're a bit younger, you're really planning for retirement, or let's say you're 20 years old, you already wanna, you found the love of your life and you want to save up for marriage already, like let's say in the next 15 years, then maybe you can go a bit more aggressive and increase your equity allocation knowing that you can handle the volatility. And if you love your significant other enough, no, to handle that volatility. But yeah, just that, keep the faith in the market. When you see big dips, try to take advantage of them. I guess one last, saying or words of wisdom to end for me is that actually, the Chinese word for crisis can really be represented as danger plus opportunity. So actually, my friend was telling me this the other day, that the Chinese use 2 brush strokes to write the word crisis. And one brushstroke stands for danger, and the other one is for opportunity. One thing to remember is that in times of crisis or danger, especially when it comes to the markets, it also comes hand in hand with opportunity.
Thank you for that. Erica, how about you?
Yeah, I actually agree with what Nikki said. So it's really very insightful that you take in considerations what you would like in terms of investing and becoming greedy when it actually pushes you to be. But for our listeners, I want to say siguro that investing is actually a continuous learning process. And by listening to such podcasts such as this one, they are staying knowledgeable in the market scenarios that are currently happening and being knowledgeable in terms of this and regularly reviewing their investments and actually seeking guidance through the partners such as First Metro and ATRAM, you can make informed decision and increase your chances in achieving your financial goals.
Thank you. Thank you very much, Miguel, Lopa, and Ericka Ninon from ATRAM. So thank you very much. And I hope all of the listeners there, please absorb the knowledge that we got from these guests, especially na ang daming funds, 20 plus funds. And then see Ericka answered how to choose the best fund, right? It's very important to pinpoint the options that's best for you, all right? So thank you. This has been Royce Aguilar, Department Head for Retail Research of First Metro Securities, and it's in with First Metro Securities. It's hashtag your future first. So thank you everyone.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the First MetroSec family.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.